so bad when you finally know just how low, 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 low she'll go. Baby, the bad, bad thing.
Ah.
Baby, the bad, bad thing.
Well, what they have been doing is a lot of things.
Speaking of my night in Vegas. No, sorry. That has
Ooh,
nothing
do
to do
tell.
with.
China's been doing a lot of things when it comes to their financial markets and certainly to their currency specifically. Let's bring in Eric Swergold. He's founder, managing member at Firestorm Capital. He joins us on the phone in San Francisco. You had a call for a Christmas devaluation for the yuan. So maybe your timing just a hair off, but they did it.
Thanks, Carol. Thanks, Cory. Thanks for having me on the show again. I was wondering what music you would play for the intro this time. I thought maybe you'd go for "Welcome to the Jungle."
Welcome to the jungle.
But yeah, we did get the pretty close. I did think we'd get a big devaluation on Christmas Day, and so when I came up for air from scuba diving in the Philippines, and I checked my Bloomberg on iPad, I was sorely disappointed not to see that. And then, of course, every market day since then, they've devalued by anywhere from 10 to 30 beeps. So it is coming in that direction, just not all at once, and the markets don't like it. I think there's a couple of things going on here. The Treasury market has bounced back as a safety trade, but probably not as much as people would have expected given the big sell-off in global equities. And I think the reason for that is that China is probably unloading treasuries and using the proceeds to prop up the RMB and also to step in and prop up the Shanghai stock market.
Yeah. So, in what way do you expect them to try to do that? It seems like they've just pulled every trick out of the bag late last year, and trying to unwind those tricks just didn't work.
Yeah, it hasn't worked, and as you saw this week with the circuit breakers kicking in twice, with the market down 7%. I sort of think that's akin to my telling my teenage boys not to do something. If I tell them not to do something, it makes them want to do it more. So them putting a circuit breaker on the market, I think, made people want to sell more, which perhaps is why they announced this morning they're going to take off those circuit breakers. So who knows what's going to happen tomorrow? I don't know if that's bullish or bearish in the short term, but those kind of mechanical things never really seem to work in China or here. I mean, during our financial crisis, we put in special rules to prohibit short selling of financial stocks, and it helped them rally for a couple of days, but it didn't change the end result that financial stocks went down with the housing market. So I think there's also some unintended consequences of the trading halts, which is that it forces us.
Eric, let me ask you something, though, because their currency reserves shrank by an unprecedented $108 billion in December. It's the first ever annual decline in the nation's foreign exchange reserves. And I guess we know China has said they're going to do things, in terms of the yuan. They're trying to stabilize it. And their defense has worked for several months coming off of the August volatility. But something's going on now. What is it? What's different? Is there nothing different? And maybe just investors are slow to remember that there's nothing really different. Or is there something different?
Well, I think the way to look at it is going back to my earlier call, which is that China tries to control everything, and now we're seeing that maybe they can't. And that's the biggest problem. In terms of the currency, the first time they devalued it 3% in a day, and that caused a major hiccup in the markets around the world. So they said, okay, this time let's try something a little different. Let's devalue it a little bit at a time. The problem is if you've got a currency that's 25 to 30% overvalued, people start thinking, well, how are we going to get from here to there?
Yeah.
And if it's 10 to 30 basis points a day, it's going to take quite a while, and that's going to be a headache for a lot of people for a long time. Now, they'll probably play around with it and make it difficult for all of us. I'm guessing at some point they'll come in and actually ram the currency up, try and cause a short squeeze, try and cause some kind of panic. But I think at the end of the day, the currency's going down, and it's just a question of how long it takes to grind down and how much money they want to spend supporting it and supporting their stock market. The other thing that they had was they had a lockup on shares held by anyone who held over 5% of a company, so basically insiders and big funds, and they've been prohibited from selling since August. And so you've sort of had this weird market where anyone who wanted to buy could buy, but only a certain percentage of the people who wanted to sell were allowed to sell. And that's why you got which is why you got the big market rally off the lows from August. The lockups were supposed to come off today or tomorrow, and now they're saying those lockups are not going to come off. I'm guessing they'll come, and this is purely a guess. I don't have any special inside information from CSRC or anybody else, but I'm guessing if they're going to take the lockups off, they probably want to do it in some organized manner, similar to Rule 144 sales in the U.S., or maybe they'll say that they can only sell a certain percentage of their shares per day or per week, or maybe they can only sell on upticks. Maybe they can only sell if the price is higher the day before.
You also had a lot of private funds and hedge funds in China. They've got agreements with their investors that spell out mandatory liquidation levels if their holdings drop below a certain value. And again, there's one estimate I read that as many as 30% of Chinese hedge funds may have reached those liquidation levels or getting close to them. And so I think there was some concern, too, out there that would just exacerbate the selling because they would have to. So
I haven't read that, but I think that's probably also part of why you're seeing such weakness in the Hong Kong market, which is, when people get stuck in certain markets, they sell where you sell where you can. And so the Hong Kong market, despite being in a very reasonable 10 or so times earnings, is under tremendous pressure from Chinese investors selling where they can, which is on the Hong Kong market. Now, the question is, it hasn't really spilled into the U.S. listed Chinese ADRs, in the tech ADRs like Baidu or so on, but it certainly could easily spill into these Chinese tech stocks that trade in the U.S. at some point if those funds are long those stocks and need the capital.
Erica, got to be quick, just 20 seconds. Do you think things start to calm down? Any indication, or is we're going to see a lot more of this? Just quickly.
I think we will see bounces along the way, but with the Shanghai market at 50 or 60 times earnings, I think there's 40% or more downside left in Shanghai, maybe more. And not to be too alarmist, but I wouldn't be totally surprised to see a stock market and banking holiday sometime after the Chinese New Year.
All right, we'll certainly be checking back with you. Hey, Eric, thank you so much for laying it on the line for us. Eric Swergold, founder, managing member of Firestorm Capital, on the phone in San Francisco. Right now, you're listening to the Bloomberg Advantage, and this is Bloomberg Radio.